welcome to Industry Focus. I'm Nick Seipel. This week, I'm excited to welcome Lou Whiteman back on the show to take a look at Palantir's recent earnings. Lou, how's it going?
Going well. Good to see you, Nick.
Yeah, great to have you here back on the show. We've talked about Palantir here in the past. I think this is the first show we're doing kind of focusing specifically on this company. I had you on a couple of weeks ago. We talked about the entertainment that we can get from Tesla earnings calls. There is some back end relationship between Palantir, whose chairman is Peter Thiel, and then the Tesla CEO and former chairman Elon Musk. What did you make of this earnings call, man? Palantir is a unique company.
They are, and you know what? They own that, which I respect. But yeah, no, it was a fun earnings call. They do, for people who didn't listen in, they have people submit questions. There's no live back and forth with analysts, and it's brilliant because it really gives them a chance to communicate as they wish and maybe not communicate what they wish, but it makes for a really fun call. And as issues or questions as simple as, what's Palantir do, which was one that you pulled out that I thought was great, right?
Yeah. So they take this out of the Tesla playbook where they take submissions for investors online, and then at least for the first part of the call, I would say most of the call, the Q&A portion is spent answering those questions, having the IR executives read that out. Yeah, one of the things we struggled with here, Lou, is trying to figure out, all right, what exactly does Palantir do? We had a whole episode where we talked about these highly classified businesses. Sometimes everything's kind of behind a wall. It's hard to figure out what's going on, what exactly the nature of these programs are. And it seems like some analysts are having the same problem because there was a question we got on the earnings call. Says, are there plans for the company to increase its PR presence to increase awareness of its business model, which may lead to increased utilization of Palantir's various software platforms? We got an answer from the chief operating officer, Shyam Sankar, and I don't think it was super satisfying for those who are trying to figure out what the business is all about. They say, I can't really tell you why some people don't know or understand what we do. I can tell you about the people who do know, though. It's the special operator who chased down a car to give him a hug. It's the civil servants who work tirelessly to deliver vaccines in the US and the UK. It's the French government as they race to prevent bombs from exploding on the eve of Macron's election. It's the German police who caught the suicide bombers in time, the supply chain operators at the World Food Program tackling COVID's escalating impact of global poverty and hunger, the factory workers on the assembly lines from Toulouse to Detroit. So that's an answer. It's not really an exact answer. What is your understanding of what Palantir does and where they fit in, other than being like sneaky spy software people?
So the big picture is this is a data analytics company. They bring order to data, and they do it with AI. They do it with a human intelligence because humans are better at sorting through data than machines, but they do it with the speed and the just the total volume of a machine. So it's that human level intelligence at the volume of machines. It allows them to do amazing things. Most notably, they helped the Pentagon find Osama bin Laden, helped figure out that Bernie Madoff wasn't on the up and up. It is a special sauce. It's AI that helps sort through mountains and mountains of data and find things that both a human on his or her own, or a lesser AI is going to miss. That, in a nutshell, is what they do. But it's complicated.
Yeah, it's complicated. They describe their culture as an artist's colony, so very eccentric, you would say, and maybe fits the Peter Thiel ethos. He has his book 0 to 1. I think it's one of the best investing books out there. But it talks about you have to be different to achieve something different. They're certainly being very different from other folks in the certainly in the government services industry, maybe other companies in general. When we look at the numbers from the earnings report, what the company is giving us as far as performance of the business, what stood out to you from earnings?
Sure. So start on a very high level. It was a very good quarter, this recent quarter. And we should note they only went public late last year. So this is it's an 18-year-old company, but it's relatively new to the public markets. Anyway, they earned 4 cents per share on revenue of $375 million. That easily topped estimates on revenue. $353 million was the estimate. And it was a penny ahead on analyst expectations. Revenue was up an eye-popping 49% year over year. and adjusted operating margin top 30% for the third straight quarter. So I mean, this is a good, solid business. And we'll talk about it later, but sort of, I think the heart of the question of what does Palantir do? Why don't analysts get it? Is there is sort of a market disconnect right now going on with, the strength of the business versus the strength of the stock. And it's hard to get by, but look, they are forecasting great things. They had almost a 3-to-1 book-to-bill ratio, which means they're bringing in 3 times the business they're billing out. That is fantastic. They had 20 new commercial customers in the quarter. Many of those, to be honest, they did invest in, so maybe there's a bit of an asterisk there, but that is growth, and commercial side growth, as we'll talk about soon, is key to the bull case here. Most impressive, they don't really give guidance, but they said they are confident of 30% annual revenue growth for each of the next 5 years. So we're talking about growing the business from just over $1 billion on a analyzed run rate to a $3.5 to $4 billion company in a matter of 5 years, 2026. That's, as an investor, you got to like that, right? I mean, they are definitely going in the right direction.
Yeah, the big question for me, and you may or may not have deep thoughts on this, Lou, but just why now? You mentioned this is a company that's been around for a number of years. They were involved in the Osama bin Laden, capture and a number of years ago. And so this company that's been around for a while, now we're seeing this incredible growth, forecasting lots of growth into the future. What is your perception of, the corner they've turned here, or why now?
And I should note, I mean, this is perception because, as we discussed from the top, this isn't a company that really likes to spell out all of its thoughts to the markets. But look, they only went public last year. That coincided with a real push on the commercial side. They have mostly been a government contractor. I think what we're seeing here is kind of part of their evolution into hopefully a more diversified contractor serving both government and commercial customers to kind of justify a strong public listing. I mean, they've been around for 18 years and they are only now a $1 billion company, mostly defense. That's going to trade at a different valuation than a company that can really attack the commercial market. So, and we can get into that in a second as far as where they are in that, but I think that this kind of the PR push, the going public, the commercial, this is all about turning it into from a niche government contractor to a more mainstream data analytics company.
Right. That's that leap. Maybe if you think about it, there's a couple examples in autonomy, right, where you had the DARPA program that was about autonomous vehicles, and now you have lots of companies trying to launch that in a commercial sense. If you look at iRobot, that makes the robot vacuums. The early history of that company was they were a robotic minesweeper that you don't want people to be going around walking through the minefield tracking for mines, and so that was the early development of that technology. Maybe this is another example of technology kind of developed in the test tube of the military that now you can open up the floodgates and unleash it out onto the commercial world. One thing you mentioned about Lou, so some of the growth in revenue we're seeing, I think they said it's only 1% of their growth in revenue, but it's a huge chunk of their total contract volume is coming from these smaller companies. They call them day zero companies that they're investing in. What can you tell us about what they're doing here? And obviously there's some risk.
Yeah, no, they are investing in partially through the SPACs. They are investing in companies that they see promise in, and they are also finding customers that way. Which is, you can't do it forever, but it's hard to knock the strategy. I mean, and let's talk about a little, because I think this gets back to that initial, what is Palantir, and the question was, why don't analysts get it? Which is an interesting thing to say. This is a company, as we said, this is most of their history has been on the defense side. Right now, it's almost a $50 billion market cap on $1 billion run rate of sales. So a quite rich price the sales on today. Even if you go forward with that 30% growth over 5 years, we're still talking 12 to 15 times projected 2026 sales, which is honestly, defense contractors mostly are less than 2 times sales. It's just out of this world for the defense. So this is part of this process where they need to become a commercial company. And while they're making progress here, and like with these day zero companies, they are being innovative in how they're going to do it. there was nothing in this quarter to suggest that the profile of this company is going to change anytime soon. Government was 61% of total revenue in the quarter, and it is growing faster. Government grew by about 66%. Commercial grew about 28%. By comparison, and it's hard to get a perfect comparison, but Snowflake, which is a commercial company, similar size revenue, they grew revenue by 110%. So it is not growing as fast as Snowflake, and on the commercial side, and it is still, I mean, if government's a bigger part of the pie and it's the side that's growing faster, it is really hard quickly to transition yourself into a commercial vendor. I think a lot of I don't know, the angst, I guess, in that question is why don't analysts get the commercial? And I think that's the better answer to that question right now, is that, commercial is still the area of promise, but not the area that is the bulk of the business. These day zero companies, initiatives like that, they've partnered with IBM to try and sell the software, which, kind of will cut margins, but should hopefully help with growth. These are ways where they are trying to transform themselves into the more commercial minded company that arguably could justify a higher valuation long term.
Yeah, they talked about hiring a significant number of sales staff, obviously going out to sell to more, a different, more varied group of customers. I will say, for any company that this does make me a little, all right, we're kind of having a venture capital arm of our business that's spinning up customers for us. I will say, though, it makes me feel a little bit better when you got Peter Thiel, one of the best venture capitalists ever, as the chairman of the board. If there's anybody that's going to pick winners and have a pretty high hit rate there, I think he's one of them. We'll have to see.
And they have the cash. I don't think there's a downside, but I also don't think that this solves their, I mean, this isn't where they're going to have to go to. I mean, it looked really good on the customer acquisition numbers. It's not going to drive revenue and really transform the business, just the nature of these customers.
Yeah. So really questions about, how quickly they can continue to grow this commercial side. How do these bets on smaller companies work out? You mentioned the cash pile, Lou, and that's the other thing that's grabbing headlines here, is how they're spending that cash pile. So the company purchased $50 million in 100-ounce gold bars, they said, in their August 12th earnings statement. They said the purchase will be kept in a secure third-party facility located in the northeastern United States, and the company will be able to take possession of the gold bars at any time with reasonable notice. They've talked about this being insurance against a black swan event. Palantir is the eye in the sky that's helping fund or not fun, but helping, support the operations of, people like, the CIA and the NSA. What do you make of this group in particular buying $50 million in gold bars?
That is certainly the headline, right? The so-called Skynet, the company that has the AI capable of predicting the future, is buying gold. That's I don't know what to make it. I think it's a great way to get publicity. I can't imagine a lot of, at least US government or large corporate customers, saying we want to pay in gold. So it feels more like a publicity thing. Maybe if foreign government sales, it may come in handy, but yeah, I mean, it definitely catches the eye. Maybe they know something we don't, but I have a hard time changing my view of the business based on the fact that they bought gold. It's just a real fun thing to watch, see exactly what they have planned.
Yeah, for me, it's a couple things. Well, for me, partially it's a $50 million marketing expense line item. You can think of it that way, because me and you were talking about it. CNBC's talking about it. They're writing it up on Bloomberg, all these other places. And, I don't know if you could get that level of coverage across the board in the financial media with just a $50 million ad buy. And you certainly have an asset left on the back end here with the gold purchase that you wouldn't have had if you just went and spent it on ads. There's that. Yeah. Do you think it's realistic that, because they've talked about, customers have the ability to pay with cryptocurrency, but nobody's paid. They're encouraging customers reportedly to pay with gold. But the people who would realistically want to have untraceable payments are the people that Palantir has said they will not service, right? These would be potentially hostile groups and groups that would want to cover up their operations. I don't think that the U.S. government wants to cover up that they're a customer of Palantir.
No. I mean, hopefully not. I mean, there was a high-profile customer we won't name who was a customer, but it turned out that they were using the software to spy on employees and not make better lending decisions. So, I mean, but that was a few years ago in the past. But yeah, no, I mean, it's funny not to be too tongue-in-cheek, but it's hard to imagine a big customer actually piling gold into a truck and driving it to Palantir headquarters. So probably what you would have is some sort of paper that represents an amount of gold, so that which used to be the U.S. dollar. So maybe they're just trying to get us back to the gold standard. But I tend to think you're right. That's $50 million of publicity that they also have an asset in the bank on, and we'll see. We'll see what else they do with it. I'd be surprised if it's much.
Yeah, I choose to take the publicity angle on this because if you take they're predicting World War III angle here, like I don't want to predict that future. So I'm going to choose the publicity angle. So Lou, you mentioned earlier, when you look at Palantir, it's kind of tough to put a thumb on. And in some perspectives, you want to put it in the bucket of government services contractors, and others you want to put it in this bucket with, your Amazons and your Snowflakes and your Microsoft as this transformational cloud software business. About a year ago, we did a defense stocks basket, which was, some of these traditional companies. When you look at how Palantir is traded compared to some of those other companies, what are your thoughts on where Palantir fits in the bucket? And, it has different strategies for investors to kind of get into these trends.
Yeah. So, not to duck the question, but this is a real hard one because the business is fantastic. So there is, in my mind, though, a disconnect between the business and the stock, and it's hard to say. It's hard to know how long that goes on or how quickly they grow out of it. One thing I do believe is that if they cannot get the commercial up and running the way they hope to, the valuation is not sustainable over time. There is just, governments has cost plus contracts. There is only so much business. If you talk to Pentagon people about Palantir, they both love the company. They love the software when it's needed, but that when it's needed is important because it is expensive, it is cumbersome, it is a huge install, and frankly, it's best used not universally, but when it's needed. So, I do think there are limits on the government side, and I think the commercial side, they're going to run into some of those same things. So yeah, last December, I actually put together a separate basket that was, instead of Palantir, by these three defense IT firms. And, I was thinking 5 years. For the record, so far, I have not been right. My basket is losing to Palantir for less than 1% on average. If you throw in dividends, total return, I think I'm up, but, whatever. We're very early in a 5-year process. But the thing that struck me when I was looking at that this morning is that Palantir, for all of its volatility, has basically gone nowhere in a long time. Now, it has swung. It's been at various points in time this year, it's been up 60% for the year. It was down as much as 25%, wild swings. But for the year, it is actually losing to the S&P 500 by almost 9 percentage points. And it's basically, if you take out all that noise, it's a flat line. And I wonder, this company, these products, they're too good for it just to fall off a cliff. And it's hard to imagine a catalyst where it just, crash, it's done, but it's also hard to see that catalyst to get a jump higher. And I wonder if, I think one of two things is going to happen. Either they are going to surprise me with the way they can grow the commercial, and I think honestly probably surprise themselves, because I think it's going to be much more than that 30% if to really see the stock take off. Or this could just be a flat stock for a while it slowly grows into its valuation. And looking at what it's done the last year, I think, the good news is that's not the worst downside. Yeah, I really, it's hard to imagine this company just ceasing to exist, but I do question whether it can be a market-beating investment given its current valuation and the growth that's baked in and the challenges it might find growing quickly. So it really surprised me, its performance versus the S&P 500 for the year, and I wonder if that isn't telling of what we have. Maybe not for the long term, but for the next few years, foreseeable future.
Right, certainly some execution to live up to that valuation. So Lou, you mentioned that basket just for completion's sake, could you, what were the companies that was on that list of 3 IT services firms?
It was Booz Allen Hamilton, BAH, which to be honest has been the real clunker for me. But and then I believe it was SAIC and SAIC and Lidos Holdings, LDOS.
Excellent. I think, and we've talked about those in the past. I'll try to drop some links to episodes where we've talked about some of those companies. So I think any last thoughts on Palantir before we move on to our next topic?
Again, I think just back to that original thing. Why don't analysts understand? I think it's an open debate whether or not analysts understand it better than retail, or if retail understands it better than analysts. Because a lot of defense people like me are looking at it through that spectrum. We could be wrong and we could be missing it, but I think as an individual investor, you should at least be mindful that that could be what they are too. And as I say, the stock could readjust over time.
Yeah, it's that rule breaker. Is it a rule breaker or is it a faker? We're going to find out at some time in these next quarters and years. And the big thing you're going to be watching is how quickly can they grow that commercial business and sustain that growth over time. Right. So we've talked about defense a lot today, Lou, in the context of Palantir. Maybe zooming out a little bit, the headline story everywhere is what's going on in Afghanistan. Really tragic scene of what's going on there. When you put what's going on there in the context of what it means for defense more broadly, do you have any high-level thoughts or context to give us?
Yeah, I mean, as you say, it's so hard to watch. It's hard to really make it into a stock story, but these are stocks and they move on. I do think for big defense, it is mostly a distraction right now. I mean, it could be a distraction that causes some disruption. I'm pretty sure we're going to see hearings. I think it's going to distract Congress, so we could see delays on the budget. That's less clarity than we hope. That could be some resignations. There could be some shuffling. There could be some shuffling in the budget because of it. So I don't think the big picture really alters on this, but I do think it could cause choppiness up ahead. Part of leaving Afghanistan is part of a broader trend towards a shift in focus towards what the Pentagon calls great power competition. That's mostly China and Russia. And, in the worst case scenario, I guess, with Afghanistan, we're kind of sucked back in. And yeah, maybe that means more near-term spending on munitions versus great power R&D, which the companies would definitely prefer the R&D. It's higher margin, more turnaround. But it's hard to imagine a world where we stop focusing on Russia and China. And so I do think the R&D would be sustained. If anything, there was about $9 billion in the fiscal 2022 Pentagon budget to support the Afghan army. That's presumably off the table. That does give some wiggle. That's not enough really to kind of shift views on any one stock, but there is some wiggle room now. I think long-term, the thesis prior to this on all these companies remains the same, but it certainly doesn't help clarity as far as when things get done and what the budget in the next year or two looks like.
Yeah, it is kind of an interesting, history rhymes a little bit. There was the Vietnam, evacuation that was, centered around Russia and some of the things going on there. Now we have this great power focus. Whenever I hear great power, I just translate that to Cold War in my brain. Yeah. That's essentially 21st century version of that. That's where we're headed.
I think we are. And unfortunately, it's probably bullish for defense stocks over time because that does involve a lot of, again, this R&D spending, this advanced stuff. It's a very different profile than fighting insurgents, or the kind of low level war. So yeah, but until the world gets safer, right?
Yeah. And hopefully that can happen. Lou, any last thoughts here on the defense universe before we send us all home?
It's been a weird couple of years. We had the election year last year and concerns about that I think were overblown, and now fresh chaos. This remains for me a sector that if you are very long-term, and especially if you want dividends, because you have a lot of approaching 3% dividend yields, I think it's still a safe place to go, but it is a long-term investment, and there's tons of noise. You have to block out bullish and bearish.
Lou, always love having you on the show. Can't wait to have you back on again soon.
Pleasure to be here, Nick.
As always, people on the program may own companies discussed on the show, and the Motley Fool may have formal recommendations for or against the stocks discussed. So don't buy or sell anything based solely on what you hear. Thanks to Tim Sparks for mixing the show. For Lou Whiteman, I'm Nick Seipel. Thanks for listening, and Fool on. All right, so that is it for our Thursday edition of Industry Focus. We're on the 30-minute time slot now, so just 5 minutes here for questions. Let's see. Fatty McButterpants has a question about Kratos, KTOS. What are your thoughts on that company, the drone maker?
Yes, and they took a hit on earnings. We are still waiting for a production contract on the Valkyrie, the Loyal Wingman drone, and it is still hasn't come yet. And there's a lot of expectations baked into that. I think they got hit on book to bill too. But if you look around the defense patch, I think we talked about this a few weeks ago. Lockheed, Boeing, definitely Raytheon Technologies. A lot of people had book to bill issues. So I don't think. We'll have to see next quarter, but I think that was probably on the Pentagon side. They just weren't doing a lot of awards. The recent stock movement, a lot of pressure. There has been talk on Capitol Hill that part of the budget process will be a delay on some of the drone programs. So we may be pushing what Kratos had hoped this year, early next year into 2023. I think that's weighing on the stock. I still think I'm a shareholder. It is much more of a high risk, high reward than most of the defense companies. I still am optimistic that the Valkyrie is the best product out there in an area where the Air Force really, really wants something. And I'm still hopeful, but I do think, near term, we are seeing a lot of the pressures on the shares just because we've been waiting now over a year for this initial production contract. They've ramped up the facilities they need to make it happen. And it's getting tiresome to wait, and I think there is a lot of sort of antsiness with investors right now. Boeing's coming, a lot of people are coming. The longer we go without a contract, the more risk there is.
All right. So it looks like we don't have some defense specific questions. Lou, do you have any thoughts on Zillow? Matt asked questions about Zillow 17 minutes ago. Is that a company you follow?
I follow Redfin close. I like this. I think housing gets disrupted from within, and that's kind of sort of why I like the Redfin model over Zillow. But look, this has been a weird second quarter for a lot of companies. It feels like it was a show me quarter, and we're still kind of have a hangover from that. There's a lot of these sort of promising companies that the market chose to look at as glass half empty. I think Zillow falls into that pile. I don't know it well enough to know anything particular that should cause people to hit the panic.
Yeah. I think it fits in. I also am more of a Redfin. I mean, I own Redfin. I don't own Zillow, but I am a big believer in the theme that we're shifting from the way you find a property and find a realtor, from something that was primarily a network business, people that you know, people that you get referred to because they've worked with them in the past, to a primarily online business. And in that world, the companies that are the first place you go when you think, oh, I want to look at a house, they're the ones who stand to own the business and own the demand. And if the history that you've seen from lots of different tech companies, that if you own the demand, you own the market. There's a whole Ben Thompson thing about demand aggregation theory. That's his whole thing, stratechery. Recommend checking that out if you haven't in the past. And so I think Zillow, as the number one real estate place people go to look at real estate, I think they're in a really strong position going forward. I've invested in Redfin instead of Zillow, not because I have really anything against Zillow, just a little bit more comfortable with Redfin's iBuying strategy. Redfin a little bit more conservative in how they've pushed into that market as compared to Zillow being much more aggressive. That said, if you wanted to lean more towards Zillow's approach, I wouldn't go against you. They had Rich Barton, who's the founder of the company, come back and really lead this transition into going hard into iBuying, but just a little bit more comfortable with the leadership and their approach at Redfin than Zillow. But I think they both fit into that same exact theme. I think both of them are compelling, down significantly from their highs. So certainly worth looking at.
Yeah, I have to say, I have not seen, I'm in Atlanta, which is supposed to be a hot market. I haven't seen a lot of iBuying, but in the last few weeks, we have had, I believe, 3 open door houses that have been bought and based on. And so this is sample size 3, so I'm not going to make an investment decision, but I'm really curious to see how these go because it's very interesting.
All right, Lou. Well, it's noon, so this is it for us. Thank you so much for joining me. So we're going to pass it now off to. I think this is a video. This is a Backstage Pass exclusive. So they're aired first in Backstage Pass on China. Going to have Emily Flippin, Ben Ra, and Bill Mann telling you all about that. I know China's been at the tip of everybody's tongue the past week in the financial world, so don't miss that. Lou, thank you so much for joining me. See you next time.
Very good. Very good. See you next time.